Crypto and Tradfi markets are hovering ahead of the FOMC press conference. Hey guys, it's Keith Allen, and we're going to bang one of these things out here ahead of JPow's press conference coming up in just about an hour. FOMC rate decision coming up at 2 p.m. That's in just about 35 minutes. And quite frankly, if you're expecting a Fed funds rate cut today, you are in a very small class. 99.5% of Fed watchers polled expect the Fed to pause today. And so we're going to be listening to that press conference, really listening for, hoping that Fed Chair Powell leaves us a couple of Easter eggs, to gain some insight from. I think he's going to be, steadfast in what he has always done. He's going to talk about being data dependent. He's not going to be committal on making any, statements about when they will cut. But I do think that he's got two options here. We know the Trump administration leaning on him to cut. We also know that he has remained autonomous of the executive branch and wants to do so, and legally is required to do so. And so he has two options: either stay steadfast and be the guy that he's always been, which among other things has been a great public servant. Or he can, decide that he doesn't want the headache that is working under the Trump administration and take that brand new 8-month severance package deal that the new administration has offered to all federal employees. So that remains to be seen. My guess is that he's going to stick around. Although I'm sure he would have plenty of offers in the private sector if he wants to take an 8-month vacation. So we'll be listening for that. But most importantly, I think the market is going to be listening. The market's kind of on edge here, right? Some uncertainty about policy, how policy is going to affect the economy. There's a bit of a whipsaw from the whole, new deep search NVIDIA thing here this week. So I think the market is poised and ready. We typically get a knee-jerk reaction on these kinds of press conferences. So any bad news could trigger a further cascade from what we saw earlier this week. Although Bitcoin has recovered nicely. NVIDIA is still struggling, and that's understandable. But likewise, a glimmer of hope is going to be met, I think, with a positive reaction from the market. Probably the biggest thing that I think the market is listening for is whether there are concerns about a increased probability of recession based on some policy decisions from the new administration. Incidentally, very few, if any, of which have been executed yet. So that's still highly speculative. And whether Fed Chair Powell is willing to commit or at least lean into the probability of any number of rate cuts through this year, be it 1, 2, 3, etc. So without further ado, let's jump into the charts. Okay, a little bit of further ado. If you're new to the stream, welcome. My name's Keith Allen. I am a work-from-home dad, a full-time analyst, and I'm also happen to be co-founder of Material Indicators. I'll be sharing some of those tools here today. And if you have not smashed the buttons yet, do me a favor and hit them all. Especially make sure you hit that subscribe button so you don't miss any of the future streams. Let's go ahead and get into a chart. And the first thing I want to show you is something that maybe will ease a little bit of your anxiety for the day. And that is a look at the order book to see what liquidity is looking like here as we approach this FOMC decision and press conference. And as you can see here, we have a decent amount of liquidity in the zone. We've kind of been hovering around this range here for the day. And if you're new to fire charts here, this is a heat map of the order book. The brighter colors represent higher volumes in liquidity here. You can see the color scaling here. Liquidity dampens volatility. So it looks like we have some mini guardrails, if you will, around the 105K level and around the 96K level. So hopefully we don't go crazy here today, and we don't see any rug pulls that open the door to more downside. Not expecting that at the moment, but it's the Wild West of crypto. So that hopefully eases your mind a little bit. We can come back to the heat map when we wrap it too, before we wrap things up. Second thing I want to show you, I talked about the probability of a rate cut or increase from the market. And as you can see on the CME chart, 99.5% believe there is no change here today. And I think we can bank on that at this point. So charting wise, I think I've expressed pretty clearly for quite some time that I think the bull market is very healthy, but I also think that we are overdue for a deep correction. And when I say deep correction, I'm talking 20 to 50%. And yes, there's lots of history of that. I've shown it many times. You can review any of the previous streams if you'd like to see it. Here's a few examples, obviously, in the 30, 40, 20% range. I can go back and show you one in the 75% range and still in bull market territory, right? So just know that, I don't think we're going to see a 70% correction, but I do think something in the 30% range, or potentially even the 50% range is a high probability. And I want to show you why. And I want to also show you that if things do break down, because the breakdown comes kind of without a whole lot of warning. So the levels that I'm watching here obviously are the nearest support levels, and right now we are once again trying to validate an RS flip here at the 100K level. We did punch through it here a few days ago, so that invalidated the prior attempt, in my opinion. This may be it, but that remains to be seen. And it's positive that we're currently above the 21-day moving average. But should this break down again, say we get some bad news, say we have some increase in recessionary fears, or I don't know, some of the new administration policies have an adverse effect on the economy. Go figure. Next line of support here at the 100-day moving average and our prior RS flip zone around that 91.5K range. You lose that, you go to the next support level at that 86K range. But if we look a little deeper, if things really get nasty, right? And if we get that deep correction that I'm expecting, and I'm not necessarily expecting it from here, it could certainly come from higher. Then we see a breakdown closer to the support line, closer to the 200-day moving average. And in fact, if we look at the weekly chart, this is what really gives me a lot of confidence, or at least a lot of interest in this level. The 50-day moving average runs almost perfectly alongside the trend line. And I think that is a good indication, and that would be a strong support level in terms of foundational support, because you can see, the touch zones we've had. This line, by the way, is a bit of a revision off of the original line that I had drawn back from 2022. And that's because we had this rocket ascent. But you can see the touch points along the way on these trend lines tend to serve as very strong structural support. So we had a bit of a modification on that from here up to, the rallies through September. Nice double bottom here at this level. And now we have, and if you're looking at this going, hey, that doesn't look like a double bottom, let me show you a little trick here. Let's go to a line chart. Line charts don't have wicks. And if you see this on the daily, where did it go? 54-ish, right? If we see this on the daily chart here it is right here, right? Perfect double bottom here on that daily, on the line chart. So every once in a while, you may want to switch to line charts just to get some fresh perspective of what things look like. It's a great way to draw lines, by the way. And so I really like this level a lot. I like this trend line a lot right now. And again, if we go back to the weekly time frame, we can see the confluence it has with the 50-week moving average. Now, as time goes on, this line could get drawn up higher and move above this trend line, and then maybe that changes things a little bit. But for now, this is pretty well aligned. And if we were to make it down that far, it would represent a pretty solid move in that 30 to 34% range, and I think that is well in line with what we have seen historically in bull markets. So know that if that happens, that the sky has not fallen, the bottom did not drop out of the market, the end is not near. It is indeed a great buying opportunity. Oh, if I failed to mention, by the way, live chat is open if you want to join me. It looks like we got a couple of comments in here. Let's see who's here. Let's see. I don't know how to pronounce it. I'm going to say Gaia says we pump. He says macro analysis not priced in. Well, I think that things are priced in. In terms of how high Bitcoin could go, that's not priced in because it's a bit of a speculative mystery at this point. I've got some targets, and I'll show you what they are. And if you've been monitoring the market for any length of time, you know that there's a zillion different predictions of where things could go. And I do not like to speculate. I like to look at data, and I like to look at metrics and indicators. And here's what I have. You use what works for you. Here's what works for me. We have this cup and handle pattern that took years to develop. And based on the measured move from this cup and handle pattern, I've shared this with you guys in the group before. We have what looks like it would be a 77% move to the upside, and that would put price somewhere around 122.5. We'll call it the 120 to 125K range, just for the sake of, giving us some flexibility, right? Now, I don't think that is necessarily the top of the market. What is going to dictate when the top of the market hits in has a lot to do with, yes, we're on this 4-year cycle, but also what impact is the new administration's policy having on the economy? So if we do have an increase in recessionary fears, that's going to change things. If we do have a black swan event, that's going to change things. But let's say things just kind of continue as they have been. We, of course, have the most crypto-friendly administration in the history of Bitcoin, which are positives for the space. I think that after this level, if we reach this level here, sure, we could have a recoil from that. We could have a little bit of a pullback, as we tend to do when we hit highs. I do think that if the outlook remains positive, that price could continue up to this next fib level, the 2.618 fib. You'll notice, by the way, that right here has confluence with the long-term trend line, and I'm talking about the lifetime channel for Bitcoin. Let me expand on that so you have a better view of it, and you can realize that when you look at this, you see that we fell out of this channel in the prior bear market here, and we have not yet recovered it. Nothing says that we ever have to recover it, but if we do, this opens the world to a whole lot more price discovery, in my opinion. If not, we could meander along this channel for an infinite amount of time and still have seven-figure, and potentially even 8-figure Bitcoin someday. So don't rule that out. But in the short term, I think that this trend line, this channel, acts as the glass ceiling of price discovery. So depending on how price reacts when we get to these levels, we'll see. But again, the 120 to 125K range is my next target. And then from there, I'll look to the 150K range. I've heard targets up to 250, up to 350. I'm personally just taking it one level at a time, one range at a time. And I would say that I will evaluate as we hit each level. I will evaluate the market conditions at that time and see if I have confidence that we could maybe make it to the next level, right? So like I said, from here, the next level is up to that 150K range. 156 actually is where that 2.618 fib is. And then from there, potentially the 210 range and so on, right? I mean, this would be a monumental move up to the 4.618 fib, a price point in the 260 $100,000 range for Bitcoin. Not out of the realm of possibilities for this year in my mind, but certainly not something I am banking on at this point. Again, I go one level at a time. So another thing I wanted to show you guys, I shared this with you a couple of days ago, is an interesting way to do some analysis if you're not great at technical analysis. I've created this. Actually, my partner created this, and I've duplicated it, and it is basically drawing diagonal trend lines based on the yearly trend. So this dates back. Let's start here with the blue trend line here. This is the 2024 to 2025 yearly trend. It was based on the 2024 open to the 2025 open. And then I just duplicated this and pasted that across the way. This is actually this chart was actually based on the 23 to 24 trend that we had from last year. So that was pasted across these other quarterly trends, quarterly opens and closes from 2023 to 2024. And then I created a new one for the 24 to 25 trend, which you see is a little bit different. So we are currently trading above the 2024 to 2025 trend. We're still below last year's trend, which you see was rejected from here. So now let's look at the current version of the chart, which illustrates it here. Again, this is built off of the 2024 open to the 2025 open. And this orange line is the previous year where we were rejected. We're trading above this right now. So should we break down from here, then obviously we look at those key levels of support that we looked at on the prior chart. But if we're hovering in between, somewhere in between, then we're going to go ahead and look at maybe these other potential support areas here as potential landing zones. So keep that in mind as well. Let's see. Sebster, hello from England. Appreciate having you. Hey, always my pleasure. What's the question? Have you noticed how people have started pricing Bitcoin in millions? 0.1 million. Yeah, guess what? We were like the first ones to do that on fire charts, and actually got some response to that on social media. That kind of blew up and got pretty popular. So others have followed. So yeah, we actually did that when once we crossed the 100K mark. It was like, we have to adjust this chart because things were getting weird here. So we were the first. I think we were the first. If we weren't the first, we were among the first to do it when Bitcoin crossed that 100K mark. So yeah, I think that is the future, though, right? I mean, let's look long term. As you can see here, we do have a new ladder of ask liquidity that just appeared here since we first started the stream, and some profit taking is okay at this point, right? We're now 20 minutes away from the FOMC decision, and and then another 30 minutes after that for the press conference. And I think that's where we're really going to gain some insight. The market will have some sort of knee-jerk reaction to that, as it typically does, but this could hold because we've got some good liquidity in here. So let's see. I'm going to drill down into the daily and see if we have any more, can gain any more clues. Interestingly here, right? So we see a little hot spot here, and we see these two ask walls stacked above 104K. And let me dial this back a little bit, see if it's any different. Okay, so we've got these two little ask walls here. One's like almost 7 million. The other one's another 10 million. So it's about 18 million, total there. Not a huge amount, but typically enough to move the order book, right? And so notice that at pretty much the same time, we have new bids here. So imagine the possibility, perhaps the probability, that these guys don't really have much intention to get filled. and they're just trying to influence price down here, okay, and push price into these bids, which could get filled. Because liquidity is thin in between, it doesn't take much to push price back down to this level. I would not get bent out of shape if we go sub 100K again. That will, of course, invalidate the RS flip, which isn't necessarily a good thing, but it's not by any stretch of the imagination the end to the bull market. Okay. Again, will, at some point in time will be the beginning of the end, but the validation that things are really breaking down is when we start ripping through these other levels here. Like I said, I could see price going all the way down to this level at about 73K. And yesterday on Blockchain Banner, we discussed it. I was initially looking at a support level I have marked at about 76K because we have a little bit of consolidation here. But I think an even stronger level is this 73K level right here. So that is a target, I would say a high probability target if things break down below the 21-week moving average per se. All right. So that's about that 84K level. So if we do see a breakdown from here, which I'm not really expecting at the moment, but if we do see this breakdown from here, I say at the moment I'm not expecting it, but I, in the same breath, am expecting that 30 to 40% correction. So if we lose this, that's a good indication that we're going there. Simple as that. If there's not any other questions, I think I'm going to wrap it right there. We've, not much has changed here in the order book, and not much has changed in terms of sentiment in the past 24 hours, other than slightly more confusion over what's happening in the White House. Now, I will say this: I'm no economist, but there was a recent memo that came out like a day or two ago that was pausing it said it was pausing federal funding. It sounded like a blanket statement, but it wasn't an accurate statement, right? And that memo has been rescinded because a federal judge stepped in, right? It's not affecting Social Security. It's not affecting food stamps. It's not affecting financial aid for students. It's not affecting a lot of stuff. But they just pulled the memo and they just paused the whole concept for the moment. But these kinds of policy changes can have an impact on the economy. Whether it's positive or negative remains to be seen, but a lot of what is being telegraphed out of the White House is sparking concern of an increased probability of recession, and that's the one thing the market really doesn't want to see. So that's something that I'm sure Fed Chair Powell is going to be asked today in the press conference, and the world is going to be listening to how he answers questions like that. With that, I am going to wrap it, guys. I do appreciate, as always, the support and the follows. If you haven't done so yet, again, don't forget to smash that subscribe button. My goal here to share some insight that helps you identify the most important levels on the chart in both directions to help you make more informed trading decisions. Here's to trading smarter. Have a great day.